In a landscape marked by economic uncertainty and geopolitical tensions, recent developments surrounding U.S. China trade relations have captured global attention. Former President Donald Trump has once again thrust tariffs into the spotlight, reigniting discussions about their impact on the fragile balance of the global economy. As the U.S. government pursues aggressive trade policies aimed at China, the implications for both nations and the world at large could be profound. On May 3, 2025, a series of reports emerged detailing the complexities of the U.S.-China trade relationship, with Trump emphasizing a tough stance on tariffs. In a statement, he remarked, "Tariffs are essential in ensuring that our trade deals are fair and beneficial to American workers." This rhetoric echoes his administration's earlier policies, which sought to address perceived trade imbalances and protect domestic industries from foreign competition. However, the question remains, are these tariffs a necessary tool? Or do they risk exacerbating economic woes? Concerns about a potential recession loom large as economic indicators suggest a slowdown. Trump has downplayed these fears, assuring the public that trade deals are in progress and will ultimately stabilize the economy. "We are negotiating the best trade deals in history," he asserted, pointing to ongoing discussions that could potentially reshape the economic landscape. Yet skepticism abounds among economists and analysts, who warn that tariffs could lead to increased prices for consumers and retaliatory measures from China, which may further complicate the situation. China's response has been measured but firm, as officials indicated they are evaluating the U.S.'s overtures for renewed trade talks. However, they have made it clear that tariffs remain a significant obstacle. A spokesperson for the Chinese government stated, "While we are open to discussions, the imposition of tariffs creates an environment of distrust that complicates meaningful negotiations." This sentiment highlights the delicate balance both nations must navigate as they seek to address long-standing trade grievances. The potential for renewed negotiations comes as both countries grapple with the broader implications of their trade policies. A recent report revealed that the tariffs imposed during Trump's presidency had not only affected trade volumes but also strained relations between the two economic giants. Economists estimate that U.S. consumers paid approximately $46 billion more in tariffs in 2022 alone, a burden that raises questions about the long-term viability of such a strategy. As discussions continue, the international community watches closely, aware that the outcomes of these trade negotiations could have ripple effects across global markets. The stakes are particularly high as countries worldwide seek to recover from the disruptions caused by the COVID-19 pandemic. A failure to reach an agreement could exacerbate supply chain issues and hinder economic recovery efforts. Looking forward, the path to a resolution remains uncertain. While both nations express a willingness to engage in dialogue, the fundamental issues surrounding tariffs and trade imbalances are deeply entrenched. As Trump pursues his trade agenda, the impact of these policies on American consumers, the economy, and international relations will be critical to monitor in the coming months. The outcome of this ongoing saga may very well shape the future of U.S.-China relations and set the tone for global trade dynamics in the years ahead. As the world watches the intricate dance of global trade dynamics, the spotlight is firmly on the ongoing tensions between the United States and China. Recent developments indicate that tariffs imposed by former President Donald Trump are still casting a long shadow over economic relations, with both American consumers and Chinese manufacturers feeling the pinch. This situation has escalated into a significant concern as Halloween approaches, traditionally a peak season for consumer spending in the U.S. On May 3, 2025, reports emerged highlighting the alarming effects of these tariffs, which have become a critical point of contention. According to a piece from the South China Morning Post, the tariffs have resulted in higher prices for everyday goods, leading to fears that American consumers will face a fright in the form of increased costs during the Halloween shopping season. The article states, as retailers brace for the holiday, the burden of rising prices is being felt by families who are already navigating a challenging economic landscape. This sentiment is echoed across various sectors, indicating that the repercussions of such trade policies extend beyond mere statistics into the lives of average consumers. In a parallel development, Wall Street responded positively to strong economic data and the possibility of renewed trade talks between the U.S. and China. Reports from Reuters on May 2 noted that the stock market was buoyed by optimism surrounding potential negotiations aimed at easing tariff-related tensions. Analysts pointed out that a thaw in relations could pave the way for a more stable economic environment, suggesting that both nations recognize the mutual benefits of cooperation. This wave of optimism, however, stands in stark contrast to the immediate impacts that tariffs have on consumer behavior and market dynamics. Adding another layer to this complex narrative is Vietnam, which has found itself strategically positioned amid the U.S. China trade war. As highlighted by ELPAS, the Southeast Asian nation is increasingly seen as a viable alternative for companies looking to circumvent tariffs on Chinese goods. The report notes Vietnam is caught between two giants, leveraging its position to attract businesses seeking to reduce dependency on China. This shift could result in long-term alterations to supply chains, prompting a re-evaluation of trade strategies on both sides. The interplay of tariffs, consumer behavior, and global supply chains paints a multifaceted picture of the current economic landscape. With Halloween just around the corner, the implications of these tariffs are likely to resonate deeply with American families, while the broader geopolitical ramifications continue to unfold. As trade negotiations are anticipated, the future remains uncertain, with stakeholders keenly awaiting any signs of rapprochement that might alleviate the pressures of the past few years. In conclusion, the ongoing saga of U.S.-China trade relations exemplifies the delicate balance of global economics, where local decisions can ripple across international waters. As consumers brace for an expensive Halloween and investors watch market fluctuations, all eyes will be on the diplomatic efforts aimed at resolving these long-standing disputes. The coming months may reveal whether a new chapter in U.S.-China relations is on the horizon, or if the current climate will persist, keeping both manufacturers and consumers on edge. In a rapidly evolving geopolitical landscape, the United States' ability to maintain its dominance in the Indo-Pacific region is facing unprecedented challenges, particularly concerning Taiwan. Recent remarks from the top U.S. Indo-Pacific commander highlight a growing concern about China's expanding military capabilities, especially in naval shipbuilding, which could tip the balance of power in the Taiwan Strait. During a press briefing, Admiral John Aquilino, commander of U.S. Indo-Pacific Command, warned that the U.S. may struggle to effectively counter China if tensions escalate over Taiwan. The reality is that the balance is shifting, he stated, emphasizing that China is not only increasing its naval fleet but also enhancing its operational capabilities at an alarming rate. According to reports, China's naval shipbuilding has surged over the past decade, with estimates suggesting that the People's Liberation Army Navy plan could outnumber the U.S. Navy within the next few years if current trends continue. This situation is further complicated by the U.S. Congress, which is increasingly vocal about concerns regarding Chinese companies operating in the United States. Lawmakers have called for the Securities and Exchange Commission (SEC) to delist prominent Chinese firms like Alibaba and Tencent from U.S. stock exchanges, citing national security risks. The potential delisting reflects a broader sentiment among American legislators who believe that many Americans underestimate the threat posed by China. We need to take a hard look at our economic ties with China and realize that they may be more detrimental than beneficial, emphasized Senator Roger Wicker during a recent address. The ramifications of these developments extend beyond military and economic concerns. The ongoing tension significantly impacts diplomatic relations, trade, and global supply chains. Experts argue that the U.S. must bolster its alliances in the region and enhance military readiness to deter potential aggression from China. The possibility of a military confrontation over Taiwan remains a pressing concern, raising questions about the U.S.'s commitment to supporting its allies in the face of a more assertive China. As the geopolitical landscape continues to shift, the U.S. faces the dual challenge of addressing immediate security concerns while also ensuring its long-term strategic interests in the Indo-Pacific. The next few years will be critical as Washington navigates a complex web of military readiness, economic policy, and diplomatic relations. The outcome will likely define not only the future of U.S.-China relations but also the security architecture of the region. With the stakes higher than ever, the international community will be watching closely as these developments unfold.